Here we go. Hello, everyone. Welcome to the Rational Investor. Welcome back. Welcome to the RationalInvestor.com's Daily Brief Recap. I thought for fun I'd start on the Twitter homepage. There's another cool view of TRI's logos, etc. This is our free broadcast, and of course we did a very lengthy, well, not too long. It was pretty short yesterday. But we did a video on the corn yesterday and on a bunch of altcoins, so please feel free to check that out as well as sort of a dovetail to this free content for YouTubers. But I put together a nice little chart deck for you guys over there, so let's get to work and let's take a look at what's happening. Interesting, a lot of potential trouble, of course, still out of Europe, and as a result, we had that empire fractal top on the US dollar. US dollar tanked, we had an inside bar, then we rolled over, came right back down against the original lows. And you can see we've started the week out on a little bit of an up note. And also, too, if we look at risk on, risk off, you can see risk off bets, things like a Japanese yen are under pressure. But if anything, I might even call this just sort of calming down a little bit. We're still not really against kilos. I wouldn't be surprised if the US dollar has to come back down and fill in that gap. If we are in sort of a risk-on orgy here, then maybe that's what sort of facilitates that. News out of sort of China-U.S. trade talks seemed a bit more positive through the weekend, and sort of I've been talking to you guys, and sometimes these cycles go this way, that we were in a negative cycle here. Turns out most of the dump came right at the beginning of the cycle, and we actually rallied right up to the top end of the range. Interestingly enough, though, I'm actually leaning towards the idea of us going back into sort of risk-on environments all the way through to sort of the first week of December here. Now, things have gone a little bit out of control here. We're coming up now against channel tops, and I also noticed, suppose we'll talk about it in earnest when we get there, we actually hit an AB equals CD objective here on the open this morning on the S&Ps. So I wonder whether maybe things have gone a little out of themselves, because risk on is just going absolutely nuts here this morning. But nonetheless, just to start off the conversation, U.S. dollar's on a little bit of an uptick, and I'm getting the impression, but you never know with these crazy Fed officials, that they feel as though they're kind of hit sort of a neutral ground here. And if anything, maybe we need to see a little bit more development here for us to sort of call our next direction. I wouldn't also be surprised too. Actually, looking at this weekly price chart, I'm going to say that I actually like the idea of maybe like a 38.2 tag here before all of this is done. And actually, that would take us, down a little bit further. This might even turn into an AB equals CD over the next few sessions, weeks, let's say, and we actually explore against all these lows here. So let's keep an eye out for that as well. Risk on, risk off. I'm kind of thinking we're actually now transitioning into a risk on window that goes, like I said, through to the beginning of December. And Google irrational exuberance, why that sort of first week of December is a key pivot historically for the stock market. But right out of the gate, holy geez, big jump up in the stock market. As I said, we had a great report from Jamie today. He came on and did his fundamental analysis review. Interestingly enough, he had pointed out that two sectors of the economy are really reporting gangbusters earnings. And I guess it makes sense, like this KPTI, pharmaceutical therapeutics, blah, 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 just racing higher here. CLDX is another one that we really like here, just rocking and rolling. Teva Pharmaceuticals is another stock that we really like in here, just kicking ass here this morning. So we got a lot of green on the screen. I can see the stock market strength coming in here. And interestingly, like I said, Monday, well, once every couple weeks, Jamie pops on, gives us a nice macroeconomic overview, and we are, a big chunk of the way through earnings season. And these pharmaceutical stocks are surprising our analysts' expectations more than 75% of the time. So, maybe they're thinking they might actually get a positive surprise out of something like a Teva when it hits its earnings number here coming up shortly. Anyway, I digress. Point of the matter here is lots of uppy in the stock market. Risk on, just kicking butt here this morning. Big shout out to my cohort here, the Duke of Albuquerque. Said he was long his oil off of the bottoms. Price was coming down last week, and I asked him, well, are you doing anything? He's like, no, my plan says just to stay long. And sure enough, the oil just ratchets higher here and breaks out again. So congrats there, Kevin. Nice discipline on your part. And we have been talking lots about oil stocks and like Halliburton and stuff like that. What's kind of funny about this is I have been job owning about energy, and yet I can't find a goddamn trade to put on. But we do have some energy on the books. Interesting developments there, but always hunting for new names in energy. And of course, buy when it snows, sell when it goes. Here we are, beginning of November. Be interesting to see when the snow starts falling back east. But, we are in a sort of, if I want to prepare for the next bull cycle into the spring, I actually have to start opening up the wallet. And especially when we get into tax loss selling season, that's when the gifts are given out in the stock market. So nonetheless, point here, risk on is ratcheting higher. Risk off on the other side of the equation hasn't broken down per se, but you can see the bonds gapped lower violently here this morning. So we'll watch how the market acts against these key recent lows here. Of course, I'm in a bond short trade, but its target is actually looking for a 50% retracement of this entire move. So I have no interest whatsoever in touching this position right now, and it's like I think it's like a March or April or May option, so no hurry there whatsoever. The gold hanging in here. Not enough for me to get bullish per se. I like to follow the biggest gold stock around, American Barrick. Just sort of, we might be getting WE action here, but not enough for me to get too excited on the long side. Still thinking gold stocks in general probably have to come back and tag this trend line from the other side. We'll see how it goes. Only time will tell. You can see this move up here was on a lot of gaps. So I'm not really in a big hurry to be touching gold just yet. And as I sort of said just a moment ago, where the heck is it? Where are you? Risk on? There we are. Risk off, all coming off here. Risk on, just, oil and stocks just owning this market. I suppose the question is, can Bitcoin join the party? I made reference earlier. These are these happen to be three of the pharma names that we have on the books. Obviously, you can see by the price chart, Brian's pretty happy this morning, feeling pretty confident here, heading in a good direction on a big chunk of our long exposure in the stock market. Yes, I do still have on a couple puts on the stock market against the top. Remember, that's my insurance policy. And frankly speaking, the irony of it all is now hitting this AB equals CD objective. I could actually start thinking about adding to that insurance policy, but I'm going to let this have a little bit of space in here. And, if we do happen to M out on stocks, then I'll think about adding to that insurance policy. But our long side to the stock market exposure is just looking fantastic here. All right, so let's hop on over to Zircon and crypto. I spent a lot of time in the broadcast yesterday, Broiler Chickens, talking a little bit about how on the weekly charts, I kind of like the idea, especially if risk on is going into orgy mode here. I kind of like the idea of the corn continuing its way higher. If we look on the weekly price charts, yesterday I talked lots about how we have a pretty well-defined war zone in here. And if I can come in and just sneak my way in, I have a pretty well-defined risk window here. And so, I went to great length yesterday talking a bit about that setup and how I'm sort of building my army of positions in here. I did, I don't really like to go into too much detail about OKCoin levels, but you can see clearly here I was a buyer through this dump yesterday, feeling a bit more positive, but don't really like what I'm seeing out of the internals here as we come up against the top end of this trading range. I said yesterday in the video, if we could break this M top here in earnest, I would feel very bullish. And notice we came right up against the top and now we're stalling out here. Little M's coming in on things like OBV. Still quite a fight here. Trend is up. You can see bulls are still very awake. Don't like the look of price momentum here. And I think this is just simply a function that we just moved too far too fast. And price momentum here is actually confirmed divergences. And we had, of course, Willie stupidly overbought conditions. So put these two together. And we actually have, historically on the site talked about what we call our L Tangonator. And the L Tangonator just simply says, what is the previous trading range? And, do I have signs of divergence confirmed in the marketplace? And then if I do actually get market structure, i.e. big fat M's come in here, if I short that market structure level, up, down, up, fail, and simply risk to a new high, something like that, what is a risk reward on a move back to the 50% rule? Now that doesn't make any sense. I must have picked the wrong tool. Sorry folks, let's try that again. We'll go there, and then we'll go there, and then we'll go there, and gee whiz, 2.68 to 1. So I wouldn't fault anybody for taking this lower time frame short trade setup. I have just personally found, remember I'm trying to build a long position here. And I've also found that, this is a tough trade when you're trading against the grain. I want to be a day trader, all that kind of talk. We just had move stop to scratch levels hit. You can see that. So actually the day traders, and we're using this background script on TradingView. It really helps to just sort of see when the day traders should go nutso bullish. So you can see they went back bullish when this goes dark green. Nice little long that produced a nice 2 to 1. Had another long come in here, but you can see move stop to scratch level was just hit there. And on the pullback, day traders just simply say, well, we got to get the hell out of here. And I like trading with the trend. So as long as this is painted green, I have a really hard time hunting these shorts. But that doesn't mean that you can't. Here's another perspective. This is a megaphone. We came up against the top end of the megaphone, tagged the top of it 3 times, 1, 2, 3. You can argue market structure up here will give you a fail. And believe it or not, the megaphone's target is actually a tag of the bottom here, which makes sense to me too, thinking that this is a trading range. If we use our momentum model off of the RSI that we've been showing you guys here recently, you can see first W stopped the bear slide, second W through the 50 line started the bull move. That was that double bottom, big rally, woohoo! Third line, I like to highlight in purple. This is the trap line, and you can see how we just M'd out here. Now, I don't know how this candle's going to finish. Maybe we turn around and ratchet back up, but if we do finish this candle right here, you can see momentum is starting to fail here. So, we might even start drawing, the blue ones, right? This color here, I guess teal, and start saying, this is the stopping of the bull. So keep that in mind. I think we're still very much this trading range conversation. We rallied up to the top end of the range. Now I think we got to do a little bit of backfilling. Okay, I've been talking for quite a while here, so I think we'll probably leave sort of altcoin conversations, that kind of stuff for today. As I said, wanted to do a little bit more talking about Bitcoin and its sort of price action in this very tight range. And really for longer, higher time frame participants, I think honestly, this doji right here defines our range. We break out through the top of the doji here. That's 94.38. We talked about this in broiler chickens, 9,400, call it 9,500 kind of idea. Then we're accepted upper end of this range. If we lose 89.61 here, or basically lose that 9,000 level, then I think we got to start exploring down lower. So that's sort of your update status. Where are we in Bitcoin trading right now? All right, I think we'll leave the daily brief recap at that. Have yourselves a great rest of your day. All the best, and bye for now.